ICT and smart money concepts are absolutely useless without this one concept, and this is the reason why most ICT traders aren't profitable and why most strategies don't work. I've never done a video on this in the past, however in this video I'm going to tie everything together and simplify the daily bias to give you the highest probability trade setups and show you the narrative which ICT himself talks about, and he says it's vital for every trade setup. Let's get into the video. Before we get started, there's a major price reduction for the Signals Room. From $100 a month, I've reduced it to just $30 a month. I've done a major price drop for you guys because I know so many of you are serious about learning. I've been getting constant messages asking me to join the Signals Room, so I know you guys are serious about learning from the live trades, and I want to make it as accessible and as affordable as possible. I don't know how long the offer will be available, so join right now for the most affordable price of just $30 a month and click the link in the description below. And also, if you're in a passive platform challenge, we passed a 200k challenge in just 20 minutes, and this person was actually certified and funded. He's an official trader now, and he's funded 6 figures on a 200k account, so he can now trade that capital live and make real profits and join the Signals Room for just $30 a month. This is an absolutely crazy offer, so join now whilst you still can. Click the link in the description below. Also guys, you get free 1 month access to the Signals Room after we pass the funded challenge for you and get you on the live funded stage. So the daily directional bias, and a lot of people miss this, and this is why a lot of ICT and SMC traders are on the wrong side of the market a lot of the time. So there's 3 main things I want to explain. I'm going to go into in detail over here and show you a live chart markup on EURUSD on the daily chart. So the first step I want to show you guys, liquidity. Okay, so what we want to look for on the daily chart is, was the previous liquidity taken? Where the equal highs and lows, and where is the opposing liquidity? So as you can see with this diagram over here, the first step in this phase over here, right, you can see there were equal highs and lows being made. However, price took the lows out first, so it took sell side liquidity. And what's resting below the lows? Sell side liquidity. Okay, sell stops are resting below lows. So price took out the sell side liquidity over here, and what was the opposing liquidity? Can you see any equal highs and lows? And these are usually the main draw on liquidity. These are the main liquidity points: equal highs and equal lows. And you might have seen on ICT's videos magnets, and he uses these because these draws on liquidity are magnets for price. Okay, price is going to be attracted to these areas where equal highs and lows are. These are major liquidity areas. So as you can see, price swept sell side liquidity first, and then it ended up targeting the equal highs right here. So all we're looking for is just liquidity sweeps. Okay, take liquidity, sweep it in one direction and reverse in the opposite direction. As you can see over here, sweeps the equal highs and then reverses in the opposite direction, and then ends up targeting this low over here where sell side liquidity is resting. And over here, here's the most obvious example of liquidity, okay, and manipulation in the market. So as you can see, there were equal highs right here and equal lows. What's being built up in this consolidation? Buy stops above highs, sell stops below lows. So as you can see, the sell side liquidity was taken out here again, and then price targeted the opposing liquidity, right, which was again equal highs and equal lows. And it doesn't have to be equal all the time. It could just be an old high low, significant high low. However, equal highs and lows are the most significant, as that's where the most liquidity is resting. Let's get into the PD arrays. So what are PD arrays? So essentially it's just a premium and discount range. So if you mark out this market structure shifter here, which I'm going to go into on the next example over here. However, if you mark out the range with this fib tool over here, above 50% you're going to mainly be looking for sells, and below 50% you're mainly going to be looking for buys. Now, where are we currently? So in this example over here, let's say we're right here. Okay, we're in this time in the market live. We are going to be in premium. So what we're going to be doing is we're going to be looking for sells mainly. Okay, so on the daily we're going to be looking for price to return to the discount of the range before moving higher. Okay, however, a lot of people think that we're in the premium, so we're only going to be looking for sells. However, you can actually take buys on the lower time frames if you do have your directional bias on the daily time frame. Okay, so for example over here, yes, we are in premium, however we have this PD array. What's a PD array? If you haven't watched my order block and fair value gap video already, because these are going to be the most common PD arrays on the daily time frame, go watch my video on the order blocks and FVGs because this will clear up a lot of confusion. So all you want to do is mark out your order blocks and fair value gaps in the range. So in the premium range, let's say we have a fair value gap over here, a bearish fair value gap. All you want to do is mark that out, okay? And if we see lower time frame buys up to this area, we can take it if we do have the directional daily bias in mind. Okay, and from this level over here, we're going to look for more lower time frame confirmation from the daily. Okay, so from the daily to lower time frames, we're going to look for confirmations to take the trade down into the discount range. It's very simple. Basically, above 50% we look for sells mainly on the daily, and below 50% we look for buys mainly on the daily. And again, PD arrays, the discount arrays are going to be below 50%, and the premium arrays are going to be above 50%. Now, order flow, and this is probably one of the most important yet misunderstood concepts in ICT language, okay? When you're talking ICT language, a lot of people miss this out, okay? So what is order flow? What is institutional order flow? Essentially, you want to mark out the swing highs and swing lows around price. And what you want to look for is a market structure shift. Why do you want to look for market structure shift? Because this shows us where the momentum is. This shows us the obvious direction that price is moving in. And now, crazy important, the factor that a lot of people are missing out also is displacement. This is so underrated, okay? What you want to look for is, let's say price is in an uptrend over here, okay? So price is moving, making high highs and higher lows. As you can see, what phase are we in? You can see price made a higher high, higher low. We're at a higher high right now. Is this a valid higher high? Yes. Why? Because as you can see, price broke this structural point over here. It made a market structure shift with displacement. It's not just one body that closed above, okay? There'll be a series of candles closing above in this example on the daily. So what could we expect? Expect a retrace to make higher highs, okay? However, what's an invalid market structure shift, okay? So as you can see, we just mark out our swing highs and swing lows. So high, low. Is this a valid higher high? If this has just wicked the structure, and I'll show you in the live market examples in a second, however, I want to get to the theory first. If price has just wicked this structural point over here, okay, and it's not closed above with a series of candles, this is most likely going to turn into a liquidity sweep. However, a lot of traders are misunderstanding this concept, okay? They're abusing the structure. They think, okay, price has made a higher high right here and a higher low. So because price has just gone above, and even though it's not broken with displacement, they'll think, okay, price has to make a higher low to then go ahead and make a higher high. However, that's wrong. What will end up happening is price will end up taking the opposing liquidity, okay? Swept buy side over here, it will end up sweeping the sell side and then stopping a lot of traders out. They'll be marking out the PD arrays right here, okay? They'll be marking out the range. They'll be looking for buys in this area and they'll end up being stopped out. This is what I've seen a lot of new traders do, and this will save you a lot of time if you just study this one setup, okay, before jumping into the live markets and taking invalid displacement trades and taking trades in the wrong direction. And then finally, we want to get our bias, okay? You want to find our directional bias. So you want to make the framework for your trade. You want to make it make sense, okay? If you're looking for buys in discount, would that make sense? So if you're looking for buys on the 15-minute, for example, or the 5-minute time frame, whilst the daily is in a discount range, would that make sense? And if it's in an uptrend, if it ticks all the boxes, if it's swept liquidity to the downside, if it's tapped into a bullish PD array in discount, and if the order flow is already bullish on the daily, and you're looking for a 15-minute buy in this discount area, well, that trade would make sense. The probabilities would play out in your favor, most likely, okay? So what wouldn't make sense in the live markets when you're trading? So let's say you're taking buys in a premium array, whilst price is in a premium array right now in the premium range of the daily. Let's say you're taking buys on the 15-minute based off, let's say, a sell side liquidity sweep. So let's say you see something like this, okay? Let's say you see that on the 15-minute and you're looking for trades in the opposite direction, looking for buys. Well, price is in a premium array. Price, the overall direction is down from here, and what will end up happening is price will actually end up going down and you'll end up being stopped out, and then you'll blame the system for not working. However, what you've missed is the overall bias. What's the bias? Where's the order flow? You got to look at the liquidity. Liquidity has been swept to the upside. Okay, that's more confidence for the trade going down. Look at the PD array it's tapped into. It's tapped into a premium array, for example, fair value gap, order block, inversion FVG, balance price range, all essentially the same thing, and you'll know this from experience on the live market examples. And then price will end up actually reversing in the opposite direction because price is bearish on the daily, and you've missed that. You've just gone off the 15-minute time frame, and remember, the higher the time frame, the better the confluence. So what you want to do is you want to take the daily and higher time frame, such as the 4-hour and daily time frame, into more consideration than just a 15-minute confirmation, okay? And what you want to look for mainly on the daily bias, on the main daily direction, okay, is you want to look for the draw on liquidity. Where is the draw on liquidity? Is price going to go up and attack buy side liquidity, or is price going to go down and attack sell side liquidity? Remember, especially with this over here, if there's no market structure shift with displacement, new lows are going to be created. And if there is no market structure shift, you know that there's no displacement over there. So now the next draw on liquidity are these sell side lows right here, resting below all these old lows, below equal lows. You could look for more sells on the lower time frame. Then once you got your trade framework worked out. And ICT himself says he looks for directional price runs in his kill zone times intraday. So just because the daily is bullish, for example, let's say it's in the discount range, it doesn't mean you have to take bias strictly. However, you do want to know if you are trading against the trend or with the trend. Are you with institutional order flow, or are you fighting against it? If you're fighting against it, you're most likely going to be stopped out, and you don't want that, okay? So make sure you take everything into consideration, and let's mark up this live YOUSD chart. If you're trying to pass your funded challenge or you're looking to get funded, then this automated trading bot is for you. Most people spend $8,000 to $9,000 in the space of 4 months before they reach their first funded account. But with this bot, you can avoid this waste of time and money by letting it pass the challenge for you, 100% guaranteed. Our bot does not miss. It passes the challenge usually in a few hours and the same day. So the day after, you could be funded 6 figures, trading live, making real profits. It's a zero risk investment. If you fail the challenge, you get a full refund. However, we've never ever failed the challenge, so you will be funded. That's 100% guaranteed. Get on this whilst it's still available. Click the link in the description to get funded, and don't waste time. First thing we're going to do is we're going to mark out the liquidity, okay? So where was the most previous liquidity sweep, okay? So as you can see right here, there were equal highs that were swept right here, okay? And again, if you just zoom out and look left, you can see again there was an old high right here that price actually took out. Okay, and all we're doing is we're marking out the liquidity. We're not overcomplicating it. A lot of people like to overcomplicate the daily chart. All we're doing is we're marking out liquidity areas, okay, where liquidity has been swept and where is the opposing liquidity. So as you can see here, price took out this high, this old high, relative equal high, and then price took out this old high again. Now, the second step, PD arrays. So what you want to do is you want to mark out the range that we're currently in, and after price swept liquidity, did it tap into any points of interest such as order block, FVG, etc. So what you want to do is just look left after price took liquidity. Are there any fair value gaps in this range which price tapped into? And as you can see right here, we got this fair value gap right here with these 3 candles, okay? So as you can see, after price took liquidity, price just about tapped into that area of fair value, okay? So now we want to mark out our range that price is working in, okay? So all we're going to do is mark out the premium discount range. So as you can see, I got the fib levels marked out already. These are the settings if you want to copy it down, okay? So all we're doing is we're looking for buys mainly below 50% and sells mainly above 50%. Now, again, with the PD arrays, we want to look for order blocks and FVGs within the premium and also within the discount, okay? So now that we know price taps into this point of interest and it could be bearish from here, where are the PD arrays for this setup? So as you can see, we have an easy fair value gap to spot right here. Okay, and if you drag it out left, you can see there's also another fair value gap in line with it, which making it a balanced price range. Okay, so this is a very good fair value gap right here. And also there is a major order block right here. However, I'm not going to mark that out. You don't want to mark out everything and make it too messy. However, you do want to take everything into consideration. Okay, again, in premium, what do we have again? We have another fair value gap right here. Okay, and if you drag it out left again once more, you can see that there was another FVG within this current fair value gap. So this was a balanced price range. Now for the discount arrays, what we're going to do is we're going to do the same thing. We're going to look for fair value gaps mainly, okay? Fair value gaps, order blocks, they're the main PD arrays that price likes to tap into. So as you can see right here, there's a fair value gap. And in line with this fair value gap, we have an order block right here, which I'm going to mark out like this. However, price is pretty far away from it. This could be the overall retrace point for price. Okay, price could make a higher low over here, but we're going to get into the order flow next. However, one more thing that I want to get into, as you can see, when price broke out of this this range over here, okay, took this liquidity, you can see there was a fair value gap created right here. However, the confluence for the direction now, which also links in with the order flow, is you want to mark out the consequent encroachment of the fair value gap, and you can use this as a clue for the direction, which is an underrated hack. Okay, a lot of people don't use this. So as you can see, the bodies closed below 50% of this fair value gap right here. What is this telling us? This fair value gap is likely to fail. Okay, price could go lower, and we are already in a premium area of the range. Price could go lower to a discount area before continuing higher. Let's get into the order flow next. So now for the most easiest and obvious yet misunderstood concept, order flow. What you want to do is just zoom out and look at how price is moving. Okay, yes, it's swept liquidity over here. Does that make it bearish forever? No. As you can see right now, price is moving in an uptrend, making higher highs and higher lows. However, the question is, what phase are we in right now? And does it make sense to be taking positions in this area that we're in right now? So as you can see, where is the market structure shift? And did it break with displacement? Okay, then we're going to look for where we are in the order flow range right now. Are we at a higher high, higher low? Where are we? So as you can see, the structure, you got high, low, higher high. Price quite obviously broke this with displacement. So this would be a market structure shift for me. I wouldn't call this a liquidity sweep. I would call this a market structure shift, because look how many candles closed above with displacement, and look how many candles stayed above this area. Okay, price still hasn't revisited this area, so this is our market structure shift area. This is our high, low, higher, high. Price is approaching this higher low area right now. Okay, so did price break it with displacement? Yes. Are we at a higher low area? Possibly. Have we tapped into a discount array for price to actually be bullish off and make a higher low off? The answer is no, not the best one yet. Why? Because as you can see, let's just get rid of this for a second. Price tapped into this fair value gap right here, however price closed below, okay? And price barely tapped into the 50%. Price can reverse from here, yes it can. However, it would make more sense for price to tap into this area of fair value gap where an order block is also resting and sweeping more liquidity, because as you can see, there is a new low created right here. There's sell side liquidity resting below this low, and it would make sense for price to do a deeper retracement because we are in premium right now of this overall range before continuing higher. And we aren't guaranteed to go higher at this point. A lot of people think, okay, we could just buy as soon as price taps into this area. You're mistaken. We have to look for confirmations in this area. We can't just blindly buy off a discount array. No, we have to wait for our lower time frame confirmations in our kill zone times, which I've shared so many videos with you. I've got all these YouTube strategies which you guys can use once price taps into these higher time frame areas. Okay, we want the highest probability trades possible. So again, where are we right now in our range? We're in the premium right now. So what's the confidence for price going down at this point? And another underrated hack for our bias, okay, we're going to use our bias now. Where is the previous day high and the previous day low? Because as you can see, just looking at the chart, usually every candle takes out either the previous day high or previous day low. And I've done so many strategy teaching this and preaching this, okay? So now if you guys couple the strategies that I'm teaching on YouTube with the daily bias and the daily order flow, right, and the directional bias, you will unlock profitability. This is the missing piece, okay? So all you need to do is mark out the order flow, the direction. So the question we got to ask ourselves is, will price move up from here or will it move down from here? As you can see, we are in the premium of the range. Price has closed below 50% of this fair value gap, telling us that this fair value gap may not hold, and we do have other discount arrays. So price could go bearish. What we could see is a tap into this fair value gap, which price hasn't done already, okay? We could see a tap into this fair value gap before moving down and attacking the opposing liquidity, or we could see a move higher to this fair value gap, and then we'll see what happens there on the lower time frames, okay? Another mistake that a lot of people are making is they'll say, okay, price taps into this fair value gap area here, then it'll sweep liquidity, then it'll take out this high, and then after this it will consolidate, okay? And what you're doing there is you're overcomplicating it, and this is what a lot of new traders do. It will save you years of inconsistency if you just mark out one move at a time, okay? So as you can see, previous day high is right here. Are there equal highs here, as you can see just on the daily time frame? Yes, so now we've got a liquidity pool right here. What could we see tomorrow? Possibly a sweep into this area before looking for confirmations to take price down, or price could then continue going up, and then we'll see what happens after that. However, you got to mark out one move at a time. The other option is for price to tap into the discount, a bit of a deeper retracement. So we are bullish overall. However, price could tap into this, sweep the sell side liquidity, tap into a discount area, for example, over here, and then we could look for trades in the opposite direction, and it doesn't have to make a higher high, okay, after this, because let's say this fair value gap is left untapped. Price could tap into this area, and then we could look for the lower time frame confirmation to take it down. And then this the framework for this trade would be there was a liquidity sweep, okay, higher low, a lower high created at this fair value gap, and then we could take the trade down. Okay, that's our overall bias, right? However, remember, price could also make a higher high. However, you got to trade one step at a time, okay? You don't want to mark out 20 moves, okay? You won't find profitability doing that, and this is where a lot of traders go wrong. They want to mark out every single move, and they want to be a sniper in every single session, okay? You only need one session, and you will be profitable if you pair it with the daily bias. So to summarize, all we're waiting for is the lower time frame reactions in the higher time frame areas. Right here, we're going to wait for lower time frame reactions, lower time frame reactions, lower time frame reactions everywhere. After sell side liquidity gets swept, we're going to look for the lower time frame reactions, and if price keeps ranging within here, we could still look for our lower time frame setups within our time window. Within the time windows that I've taught on YouTube, you could look for them setups to actually play out on the 15-minute, on the 5-minute, even on the 1 hour if you do trade that time frame, okay? However, you've got to wait for the lower time frame reactions in the higher time frame areas, and remember, we always want to look for a rule-based idea to look for a time-based model. So if you guys stick to just these three things, these liquidity, PD arrays and range, and the order flow, you will form a bias, okay, and you will be profitable if you pair it with the correct lower time frame confirmations and the correct rule-based idea, okay. If you look at my other YouTube videos where I show my lower time frame entries, if you backtest that and look at how the daily time frame looked on those setups and what the daily time frame had in common with each setup I was showing, then you will understand why I was taking them trades and why I was looking for them specific trades at that specific time in that specific area, because it all starts off at the higher time frame area. That's why they call it top-down analysis, because you go from the top down, you go from the daily time frame down to the lower time frames. And remember, the signals is on offer for $30 a month. I've reduced it from $100 a month to just $30 a month because so many of you are willing to learn from the live trades that I'm taking, and so you guys can implement this yourselves on the market. And I want to help every single one of you guys out, so I've made it affordable for everyone, just $30 a month. I've done a major reduction and I don't know how long I'm going to keep this offer available for, so join whilst you still can. Click the link in the description below, and if you want to pass your funded challenge, our automated training bot will pass your challenge for you. We got loads and loads of proof and testimonials. I don't know what you're waiting for. Seriously guys, you need to hurry up and get funded and start making real money on the signals room, and it's literally $30 a month. You can't go wrong with that. I've done a major offer, major reduction in price. I don't know how long it's going to be on for, so make sure you join whilst you still can. That's all for today's video. Remember guys, keep it simple on the daily. You don't want to overcomplicate it too much, otherwise you will be confused. You want to keep it simple, keep it clean, and make sure it's understandable, okay? That's all for today's video. This is literally a gem of a video, so I want you guys to refer back to this video whenever you are stuck or whenever you are struggling, whenever you need a reminder. Go back to this video, share it with a friend who's struggling, who as a beginner, you know they're getting stopped out every single time because they're not trading in the right direction, or they're just not getting the high time frame, the daily bias in general, okay? And I'll be doing plenty more videos like this in the future, so make sure you subscribe and follow all my socials because I'll be a lot more active on there. That's all for today's video. I'll see you next time. Peace.